Welcome, everyone. So I have put together a special event for you guys here today. We are going to be talking about holding on to your winning trades. So when I first started trading, and you know what? Even for a long time after that, one of my biggest problems that I ran into was holding on to my winners. It seemed like once I got to the point where I was picking the right strategies and doing perfectly well with that, I still wasn't holding on to get the bigger profits, even when I knew that I had a larger time frame in my favor, that it was going to go, have a nice strong trend or a multi-day trend. Back then, I was a swing trader when I first got started. So I would maybe hold something for half of a day and then it would go for the entire week. And I knew getting into the trade that that was what my potential was for. But I let, my emotions and, maybe I had already taken a stop or two in a row. I let that get to me. And it just, it was so frustrating over and over and over again. So over time, what I noticed from my journals were patterns that were happening in the trends. So it wasn't just that I was getting into, a single trade and going from that point and focusing upon like a primary impulse move. It was a series of movements. It was like a dance. You had the whole rhythm of the trend. So to kick off the new year here, you guys, I want to share with you the system of trade management that I've been working on for well over 20 years. And this is one that's going to work for you time and time again when you're going for the bigger trends. So let's flip on over here. And I want to share with you guys, basically all of the tips and tools that I use for trying to make sure that I am getting those bigger gains out of a move. So first of all, a correct entry and stop placement is a must. If we do not have that in place to begin with, then we're going to be in trouble. It's, how many of you run into a situation where you get into a trade, you start to get some gains, and then you're moving your stop to break even because you don't want to give those gains back? A couple of you're using those break even stop levels. I know, I mean, psychologically, it makes a lot of sense. It's really hard to see your gains come back and go against you and give up something. But when you're keeping the bigger picture in mind, you have to realize that depending on the strategy, a lot of times your entry point is a major support level, and retest of those levels can be opportunities that you can build into positions. So with advanced trade management, there's a number of ways that we can manipulate those early stages of a trade. So those of you that have been following me here for a while, you know that one of the goals that we work on is getting those early portions of a trade to a level where even if they go and hit these stops or adjusted stops that we make, we can still take a gain on a trade, or it ends up being a scratch because of how we manage the trade. And I'm actually going to show you a trade here yesterday that I had as well. I guess it wasn't yes, it was yesterday. Yeah, because we were in oil. So I was trading oil yesterday morning, and I had just given this class to another group the day before. And what do you know? The very next morning, we had the exact same scenario play out in oil, where you could have used the exact same trade management in it. So I'll show you that here a little bit later on. But first of all, I want to show you the evolution of a stop. So this is how this trade management system plays out. So what we're first doing is we're identifying our trade, we're getting into a setup. What's the trade that you guys think I took here on the NQ? Head and shoulders. Yeah, some of you have a little bit of um, an ability to cheat on this one since you already were following along with me earlier. But it's an inverse head and shoulders. Now, Totally okay. It's an inverse head and shoulders. So how many of you see that? Do you see it? Yes. What do you think are some of the pros on this trade? Right. We've got nice time development. So here is our left shoulder. Here's the head. And then here's the right shoulder. So this is the pattern that I was looking at. And it creates this nice rounded bottom here. And the time development between our left shoulder, the head, and the right shoulder is almost identical. So we have almost even spacing here to here and then here to here. This is one of the main pros that you will see me look for when I'm trading these head and shoulders patterns. Now, what's interesting is this is just a 1 minute time frame here on the NQ. So it might not have that even spacing on a tick chart or vice versa. Sometimes you'll even see on the micros, for those of you that are trading like the micro NQ, that the spacing will be perfect on the micros, but it might be a little bit off on the E-minis or vice versa. And as long as one of them is lining up, then you have really good time development. Now on this, I was still a little bit hesitant. A lot of times what I'm doing is I'm using some pretty aggressive entry strategies. So over here, we have a strategy that I call a 2B. It's basically as the shoulder is forming over here on the right side. And a 2B is this V pattern. It comes in, doesn't quite hit the previous low over here, forms a pause, goes to a lower low, and then pivots. So this trade sets up as it's hitting the measured move on the downside here. And you can use this channel break as an entry. Now, because things were kind of a little bit wonky where this goes a little bit slower with the trend right here and then drops back down, I waited for the channel break here as an entry. So it wasn't quite as aggressive as you'll often see me take. This is more of what I would call a beginner type of entry for the strategies that I teach. It's a really solid entry that already offers some confirmation because you can already see the bounce starting to take place off of the lows where the momentum is shifting. So in the bigger picture, it's not giving up a whole lot because you've got a lot bigger trends that you're looking at, but you still have to make sure you're using proper stop placement. So my original stop on this was under this low here. So here's where my entry was. I used basically the channel break here. It was a little bit under this full channel because I was also looking at the smaller channel here, but it's right in this zone here. So this is what that inverse head and shoulders pattern look like. Now for the stop, I had to keep my stop under the low of that 2B because when you are dealing with a pivot type of trade, it's not uncommon that you can get a pullback into the zone of the previous low. Now, one of the things that was an advantage to me is because I waited for the bigger channel break on this particular one, the odds of it doing that retest were not as great as they would have been. So for me, it didn't bother me that it had a stop under that low because I knew the chances of it coming back down there were not that high. However, if I had used a more aggressive entry using that smaller 2B in there, then there would have been a good possibility that this could have gone and done something like that. So in a situation like that, what I will do is I will mark this trend channel. I'll look at distances between some of the previous highs and where we see these zones of these previous lows where they kind of do like these retests. I'll add this channel on here and I'll put my stop under that. So that way when I'm getting in here or using a secondary entry here, it's going to keep me from getting flushed out as easily. In fact, it's diminished my odds of being flushed out substantially. It also leaves the door open that I have another pattern like a momentum reversal. So if it doesn't go with the inverse head and shoulders on this particular trade, it still gives me that other reversal pattern. Keep in mind, when I'm looking for a strategy like this, I am looking at much larger time frames to tell me, hey, this is a major zone of support here. I have room for this to give me a larger trend move. If I'm just going for a smaller move, like an initial impulse move like this, then I'm not going to be looking to take setups where there's kind of more iffiness going on a time frame like this. Andre asked a great question. Do I mainly trade the smaller time frames like this, or do I use the smaller time frames just for entries? I kind of answer that here because I'm doing both, but I'm predominantly relying on a larger time frame. So, for example, on the E-minis. So let's say I'm trading the NQ, for example. The main larger time frames that I want to watch for on the NQ to help me with timing my entries are going to be like a 200 tick, and basically I'll use a 15-second chart because that helps me get into some of the smaller moves and see the momentum that's shifting on the smaller time frames. But I'm looking at like a 3-minute time frame and a 5-minute time frame to see where those levels are taking place. And then I'm also looking at about like an 800 tick chart to help me get a better feel for it. These are just for the day trades though. So if it's a swing trade, I would go up. And every index and every stock is going to have differences in what tick charts you want to use. For example, like the S&P 500, a major chart that I always have up is going to be the 3000 tick. And that's because it shows me the bigger moves on that larger time frame. For the Russell, I really like the 400 tick. I will find that that has a lot of the cleanest patterns on it. So you'll kind of get into a feel for, hey, which ones do you tend to gravitate more that are showing you kind of cleaner trends? And those are my favorite ones. On gold, I like to look at about a 2000 tick, and I'll look at the 800 too. Oil's about the same. I actually love trading oil because it's not as choppy as the NASDAQ for like the E-minis and the micros. Your odds of getting flushed out of a trade are a lot less, but you have to have a much larger account because your stops are going to be bigger. Your gains are going to be bigger too, as long as you're trading them properly, but your stops will be bigger. So it's not always the best answer for a newer trader. You want to start out on something like the micros. One thing that I've noticed is that if you're trading the NQ and the MNQ, I've been playing around with this since the micros were first released. I will place stop levels at the exact same place based on the technical chart, and it will flush out and take me out on the MNQ, but not even come close to touching it on the NQ. So that is something that is you want to really pay attention to, because what that can mean is that you might want your stops on the books on the MNQ just a little bit wider, give it a little bit more room. But then as it's coming into the stop level, you can switch to manual mode. So if it is showing that, hey, it is hitting that same level on the NQ, then you can go ahead and hit close on your trade as opposed to waiting for the stop to hit on the MNQ. But that way, if it doesn't hit on the NQ, you're not getting flushed out on the MNQ. So that's just a little tip for those of you that are playing with the micros. And micro gold is another one you can use too, MGC. So you can trade the micro gold. I wish they had a micro oil. They have a half contract, but it trades kind of funky. So hopefully someday they'll be getting that out. But let's get back to our topic here. So the evolution of a stop. So my core focus on a trend when I'm looking at a bigger target here, meaning I'm not just looking for the main impulse trend, but I'm willing to look for a much larger trend. What I'm going to be doing here is treating this in steps and in layers. So my first stop is going to be under that low. But as the trend progresses and continues, I'm going to be adjusting the stop. Notice here that the adjusted stop level is right at a break-even zone, but it's not really, because I didn't place it because it was at a break-even zone. I placed it because when this went and broke this channel, basically the little phoenix portion of a trade over here, that is when I adjusted the stop. And you could even adjust it under this low as well. The reason I didn't do that right away was because if you look at this pullback here, this could have done just another slight move here. So it might have, taken out that low and still gone. So I wanted to wait for that channel to break first, then you can move your stops. So once you have basically another setup, that is when you can adjust your stop. So it's also a place you can add into a trade or build into a trade. So if you're using the advanced trade management system that I teach, what you're often doing is you're looking on this first move to take some of your gains off at earlier resistance levels. And then you're looking for corrections to build back in. So what happens is that when a trade starts to really take off, a lot of times you're already going to be at a break-even zone or even a gain, even if the trade goes and takes out your stops. So it's a really wonderful system because it helps you adjust trade management right in those beginning stages so that as the trade progresses, even if it doesn't unfold the way you're expecting, let's say this comes up here and then turns around and crashes, then you're still in a situation where you're going to be taking a gain on the trade. So you don't have to worry about taking a loss, even if it doesn't go and, maybe you have a target level up here, for example. Even if it doesn't go for those targets, you're still coming out at a really good space. So as this trend develops and progresses, we basically have a 3-step portion to start with, and then we get tighter. So with the first low here, as the trade starts, we have this as number 1. This becomes number 2, and then this is going to be number 3 here. So let's watch this as it unfolds here. So as that breaks to a new high, that is when you can adjust the stop again. So you have original stop, second stop, third stop, and each stop is made in these first 3 steps as it breaks the channels to a new high. Now, in this portion here, if this hadn't broken to a new high here, let's say it fell into a longer range, we would have to wait for that to break to a new high before adjusting the trade in this system. Keeping in mind, the system is focused upon a bigger trend pattern. So we're not just looking at trading the first impulse move or the second impulse move. We're looking at the fact that this is rounding off at lows to try to get a bigger target level. So once it goes and goes to a new high, then we can get more aggressive with the trade management. So with this pattern, this is coming off of a high, and it actually had a bigger bearish bias going on the larger time frames. So even though I had this rounded low, I wasn't looking for full reversal. I was looking for something that would just do the first main trend move. And what we will see is that after it goes to that third low there, here, when it goes to the next spot and comes up, I'm going to be focusing on my targets at that point. So what I'm looking at is what's the main move that is most likely to happen before it has the possibility of going into a longer period of congestion or correction. So sometimes what you'll see is that this is going to have a move like this, and then it's going to go into a longer base and basically create a handle. But If you think that the larger time frame is a little bit more risky, you're not going to want to hold through a handle because it has a better chance of coming back down and giving up more of your gains. If it is a larger time frame that you're focusing upon, though, this is a 1 minute time frame. If you're looking at maybe like a 15-minute chart or a daily chart and you're looking at a swing trade and this is the intraday action, then you would treat this as number 2. So this would be 1, this handle here would be 2, and then you would progress upwards just like you see here, but on a bigger scale. Hopefully that makes sense to you guys, and if it doesn't now, my goal is that by the end of the class here today, it will make sense. So we're looking at this system, but it's fractal in nature, meaning you need to have an idea in mind where your target level is going to be on a bigger time frame. Where's your main resistance levels on a larger time frame? And how do we get to that resistance level? And how long could it take to get to that resistance level? So if this is a daily setup that you're looking at, then these movements in here and this correction here it's not going to matter so much. You're going to be holding for a much bigger target. Now you'll have fewer contracts because you don't want to take, as much risk, but it's basically taking the same system and applying it upwards. And you can do the same thing and apply it downwards too. So for example, maybe you've got a setup in here and you're just looking to get out on this main move. You don't want to hold for like an hour for a correction to get a secondary move. You'd much rather just go and take another setup later on. This is exactly what I did in oil yesterday. And I'm going to show you that, like I said here, in just a little bit after I get through this full system here. And the reason is that oil had a much larger bearish bias. I didn't want to hold through the possibility that I could be getting stopped out more easily on oil. So I'm going to show you how I traded oil, but how it had the exact same system of development. All right, so let's move on here. So the next step is, as I'm going into target mode, I've got my 1, 2, 3 lows. Basically what this is doing is it's creating like a 3-wave count. So you've got 1 move up, 2 moves up, and then you're going for that 3rd move up, which starts after it breaks that previous channel. But at that point, the trends will start to go into like a 1, 2, 3 pattern. So what you'll see is basically the evolution of a trend like this. You'll have your move off of the low. You'll have your first move up, correction. Second move up, correction. Then it goes and you'll get a 1, 2, 3 move. And then this is where things can get more sketchy. The trend can go into a longer range. It can go back and forth in like a megaphone type of pattern. Basically, your options for what happens at this point start to widen up. So this is the most predictable portion of this trend. But then what comes after that has to rely more upon the overall momentum of the move up, what's going on the larger time frames, and all of those things. So it's not as like guaranteed. Your probabilities are changing at that point. So with this trade management system and the evolution of this stop, we are going just based upon the most predictable portion of the trend right here. And whether you hold for longer or not depends on what's going on that bigger trend. But once you have this core system in place, that's going to help you then learn which scenarios are going to go further and which ones aren't. But having that core system is really the key. It's like any strategy. So I was talking with my League of Trader folks here last week, and we were talking about a particular strategy called an avalanche. It's basically the opposite of a phoenix. So a phoenix is your first move up, your first correction, and then your continuation. This is your phoenix trade here. An avalanche is just the reverse. It's that first counter trend move in a brand new trade, brand new trend to the downside that starts and confirms the new downtrend. So we have that as the core pattern, but then there's many variations of an avalanche or a phoenix. You've got, for example, Mega Phoenix, where it's really creating a megafoam. We had this yesterday on the NQ in the afternoon. We have a shallow avalanche, a shallow phoenix. We've got a tilted avalanche, tilted phoenix. You have all of those variations that can come out of it. But once you know the core, then it's easier to learn all of those different developments. So the core that we're focusing on here is the 1, 2, 3, and then going into getting into that more aggressive management of the stop. So as this continues along here, and we're seeing this start to break again, the focus at this point is to look at these 1, 2, 3 type of moves here. And what you will see is that the target I'm aiming for is a measured move, this to this. So here to here is my target. And I usually have my target on the books at that point. So I'm looking to get out of the trade at that level. But let's say it doesn't go to that point. Maybe it changes momentum here. Well, one of the ways you can adjust your stop to help protect you is you can take this low to this low and use that channel break to get you out of a trade. So that can help you if things shift. Now we've got other strategies that I teach for, still timing highs when momentum is shifting there. But we're looking at what's going to give you the best protection, especially if, for example, you have to, you're multitasking, right? Because you might be like on a call for work or doing something else and you're not paying as close attention to really fully target. So you want to keep a trailing stop in. You can put in a trailing stop based upon indicators on a lot of trading platforms. And so if that trend line breaks there, that can get you out of the trade automatically where you don't have to worry about, sitting there and giving back, potentially a lot of your gains on that point. So that becomes kind of like not your last ditch effort on, trailing out, but it's a good protective level. So if you miss a target level, maybe it comes, a little bit shy or something like that, that's going to help make sure that you're protected against the now increased probability that you're going to have a larger correction. So here you'll notice that that is also a measured move on a bigger time frame too. So we not only have the smaller measured move, but we had the bigger measured move too. So it just kind of gives you that confirmation that, you know what, this is a really strong target level where there's a really great chance of getting a pause and then a larger correction. Let's say, however, you're looking for more. Maybe you've got a target level up here because you're looking for a much bigger trend reversal and you don't think that it's going to go into a larger correction. So what happens if things don't pan out the way you're expecting? Well, you can still help protect yourself by watching this correction here. So if this correction goes like this and like this, so you get the shift where it's basically a shallow base after a stronger move up, you're creating an avalanche pattern. So you can adjust your trailing stop to under that level because even if this pulls back, it could shift like this and then keep going and basically give you that bigger trend move, right? Keep in mind that because of this and the way this played out, the odds are greater that you're going to get a larger correction, but there's going to be situations where the odds are higher that it's going to continue. Only in specific circumstances. Usually that circumstance has to do with you've got a really huge drop here that had tons of momentum and then it's really increasing momentum coming off of the lows. So this move might be more like this. And then you're going to be looking at that kind of propelling basically 76.4% of that larger downtrend move before it does a bigger correction. A lot of little minor tips here in this class. So if you go back and review it, you're going to see, a lot of those things like that kind of sticking out that might not make a lot of sense to you right now, but as you go through in your trading, it's going to make a lot more sense. So let's go back here to where you can adjust the stop. So now you can adjust the stop to that channel break. And that's going to help protect you because now you're going to at least get a two-wave move down. So even if this goes and creates another pattern, you can go and get back into the trade a few hours later or something. But you're not risking this changing momentum and coming back and coming and giving back most of your gains. So you're protecting your gains at this point, but you're doing it from a really solid technical perspective. So this is actually triggering a reversal. And this is a trade that I took the reversal on, and I'm going to show you why. So here is the reversal with the avalanche. It triggers a short. And we can take that exact same system now and flip it over. So as this flips, we want to look at how do we evolve our stop here as this trade is progressing. So the first thing we do is we keep in mind the 3 steps to begin with. So we have our original stop, secondary stop, and then you're going to be doing a third stop here. When this pops up though, a lot of traders will go and say, hey, I'm moving my stop above this high because this channel breaks down. But think of trend development. Trends like to move in waves of two steps at a time. It's like a dance, 2 steps, 2 steps. So if you got one move up and then this is a smaller move, well, this can actually be a two-wave correction that can go for another move up here. So what we need to keep in mind is that we can't move our stop yet, not until we have that second move in place. On the way up, we had those 2 steps each way that were very clean. So in each case, it was lower lows. So we don't want to get stopped out on a higher high where we basically just get stopped out right before it flushes back to the downside. So we want to make sure it confirms. And to confirm, we need that new low there because even if it bounces back up into the range there, there's a better chance that it can hold and then go and break down later. There will be exceptions. Main exceptions League of Trader folks know is it could do a megaphone here and then break back down. Usually when that happens, this break to lows will be about the same distance as it will then try to break to highs. So if you think there's a good chance that a megaphone can happen here, you wouldn't even want to move your stop at this point yet. When it breaks to a new low, you would want to wait to see if that megaphone plays out. So that is a potential adjustment here, but we're not going to get into that, more advanced strategy right now. I just want you guys to be aware that when we're looking at the core of the trade management system, there's exceptions. So you can get even more advanced, but once you know this core, it's going to protect you in the long run. And everything works from this core. So once that low breaks with the core, we can then move our stop. Now, our next step is to keep that very same thing in mind here, where as this moves down, this can still go and put in a slightly higher high. The odds of that happening are going to decrease once we get a solid break of that previous low though. So if this comes in here, it could bounce and go to a higher high. We don't want to move that stop until we see a two-wave correction or we have a really clean break in that previous low. Once that clean break happens, and in a case like this, if it's just one move up, we don't want just like a little teeny tiny break. Like I mentioned earlier, you could still get like a megaphone happening, but that megaphone, usually it's going to be a small break. So once you have a really clean break like this, that megaphone potential is dramatically decreased. So you don't have to worry about that going to a point where it's going to come back up here and flush you out. But if it just breaks the previous low by like a couple of ticks, keep your stop up here. wait until you get a second correction, and then you can move the stop. You can even move your stop over that second high once you get a two-wave correction. So a lot of times this can even step down like that. So this will be your two-wave correction, 1 and 2. So once that breaks there, you can move your stop above that high. And that is basically our full step down. So then you'll have 1, 2, 3. And here, again, we use that exact same system where it goes to the new low right here, breaks, gives a pretty solid break. It's not just a couple of ticks or just a little tiny portion. And then we get a bounce and a move back down. So with this, the evolution of our stop is we're waiting for that solid break of that previous low there, and then we're moving our stop. Now, as this continues, you can see how much this looks exactly like the way on the upside, where we had first the big move up, the two-wave correction, second move up, two-wave correction. And then on the third move, we get 1, 2, 3. That 3 rapid move to the upside. So if we go and flip that over, major target, we have our downside move, potential that could have gone out a little bit further. Then it goes to the 1, 2, 3. And now we can move our stop here, just like we did under here. As this broke to a new high, when this breaks to a new low, you can move that stop, and then you start to focus on target levels. Because at this point, this is where the probability is greatest that the channel will break and you'll get a bigger correction. Now keep in mind, if the larger time frame looks awesome, you're not worried about moving your stop yet. You're waiting for, a two-wave move here. Your stop's going to be up here. Once that has a two-wave and breaks lower, then you can move your stop above that high. That's only if that's a bigger time frame though. So if you're just playing that small major impulse move you don't want to hold through a break in the trend, then you're going to keep using this system. So your focus at this point is going to be to look at the target zone, not looking at wanting to get taken out with a stop or a trailing stop, but rather flipping how you're thinking is evolving. You're flipping from protecting in the early stages and building into the trade, where on each of these breaks, you can be adding into the trade. This one's a little bit trickier because it doesn't have the two-wave corrections to make it, simple to add in. You had a little check mark that you could have added in here, but you're getting pretty close to your target level at this point. So it doesn't make as much sense. It's not as easy as it was on the way up, but you still have the possibility of building in. So as this progresses now, comes into our target zone, basically I have my order on the books to protect me at that measured move level. But let's say it misses it. Again, it's just doesn't hit or I'm distracted. Then I flip to a trailing stop with that channel break as it's approaching the target level, so that if it does flip and it breaks the channel earlier on, it gets me out of the trade. And I'm not worried about this going and turning all the way around and giving back all my gains at that point that I built in. You'll also see that this is a zone where you can even reverse trades. So you can have things like, this is a tilted phoenix. You have a two-wave correction here, 1 and 2. And so this is actually triggering a buy at that point. It's the exact opposite of the avalanche up here. It's just that it's tilted up instead of tilted down. So this could also have looked like this, where you would have a move like that and then gone and done the setup. So keeping in mind, the underlying pattern, but then realizing there's variations that can happen. So that's another way that it could also even get you out of a trade, or it could flip the trade if you were keeping a little bit of a wider stop, hoping that this is going to continue. If this is going to continue on the downside, you had a bigger trend move, then at this point, what could happen is that you could get a two-wave move up and then it could flip. And that's basically what happens here. It just did it on a stronger scale. So it could have also done like this. It could have had a shallower move like that, a second wave up like this, and then gone and turned back down. If it formed like this, it would most likely do a head and shoulders and go back down. And so you would see it develop like that. Your time development would be where the point where it would break down would be about the same as here to here. That would give you the next opportunity for that to break down. So if you're on a bigger trend and you're looking to hold this for a longer move, you have to realize this could do a two-wave correction on the upside, breaking this channel. And do you want to hold for that two-wave correction? Now, what you'll see here is that because the momentum actually picked up here, there was the possibility that this could have done a move like that and come back up so that your two-wave correction looked like this and this. So that's why you can't move that stop on that bigger time frame until it does that two-wave correction to the upside or to the base, and then you can move it above that high. So that will protect you on the bigger picture. Again, it's taking this entire system and just adding it to a larger time frame. So it is like, for example, if you shorted up here, which we had a really nice 2T reversal here and shift in momentum, if you shorted there, you got your first two-wave move down, which would be the equivalent of this move down. Then you have a two-wave correction, and then that breaks down. Well, when that breaks there, then you can move the stop you might have had up here to above here, and then gone on the downside. But you wouldn't want to do it until that point. So here it shows our adjustment. And, you know, this is basically the key to any system is discipline. So if you're working on putting the system into place, you're just in like the newer stages of learning this, practice it on your sim trades or practice it on your MNQs if you trade like the NQ. Then drop down, and what you can do is you can still have your first main trade on the NQ, but then add some contracts to that trade where you're taking maybe like 3 contracts to the NQ and you're being a little bit more aggressive on that. And then you've got another 5 or 6 contracts on the MNQ that you're practicing holding on for those larger target levels. So you don't have as much risk involved, but it gives you like that actual practice, you know, the actual live practice. It works equally well in every single market, you guys, whether you're trading Forex, you're trading stocks, it doesn't matter. In fact, I'm going to show you guys an example of this, like I mentioned earlier on oil. So I had just given this class on 2 days ago, and then the next day I had the exact same development happening. In fact, we even had it happening in the afternoon later. On that same day that I gave the class too. So it was really cool because not only did we have, you know, 2 very clear examples of this going into when I created this presentation, but there was another example immediately afterwards, and then there was another example the next day, the exact next morning. It just proves that this is something that happens over and over and over again. And these were different markets too. So I'm going to show you an example. Hang on here. I'm going to show you an example on oil and how I traded oil. So first though, I want to introduce you guys to League of Traders if you're not already familiar with that, because what you have in today's class is basically a sample of just a single day in League of Traders. So I am doing education like this every single day of the week at noon every day. It's always recorded. You can always go back and study. Every single week basically focuses on a different topic. So 1 week, for example, we will be looking at advanced trade management, like this class here. And the first main class of the week will be Mentor Monday. And in that class, I'll give you something like this, where I walk through the whole system of what we're going to be doing. And then the rest of the week, we look for it live. And sometimes this means dropping down to like a 1 second chart to watch it as it unfolds, because it will unfold on a 1 second time frame exactly like it does on a daily time frame, and like it does on a 500 tick time frame, as it does in Apple, as it does on Netflix, as it does on the euro. It's just compacted. So we'll see it go, a lot faster. But you get to see it happening live. And you also get to see more of the nuances of how I manage things as things change, because things aren't always perfect. Sometimes we're going to be looking for more. Sometimes we're going to be looking for less. And the great thing about League of Traders Live, as you're seeing some of these folks here mentioning, is that when we are focusing on things live, it's instilling it in our brains as it's unfolding. So you're seeing all of the details. Harvey says if anyone wants a reference today, he's happy to talk to any newbie. Actually, I think pretty much any of you guys here that are chatting would be willing to talk to any folks that are interested in League of Traders. But I have a really great offer for you guys here today too. So it gives you the opportunity to see what League of Traders is about without a huge commitment. It is going to be a chance to join for 3 months for $150. So this is like a single trade, you guys. I mean, that's what you're getting, but you're getting the educational value of a lot of these advanced trading seminars that are charging you like $3,000-$4,000, but you're getting that all in the course of just $150 for 3 months. So basically, as these folks are saying, you're getting all kinds of things in every League of Traders session. And here is the link to join for 3 months. Now, a lot of people say, I don't have the time commitment to do it. Well, you showed up here on Saturday, right? It showed up, or you're watching this video, and you put the time into doing that. And this is just about an hour worth. So you're getting this 5 days a week times 3 months for $150. So think about that, and think about what that means to your trading as you're applying it. So not only is League of Traders these individual classes every single week, they're always recorded. You can go back and view them in the member section of my website, but we also have other things. So every week begins with Mentor Monday. It kicks off at noon. Tuesday through Thursday, I drill in the lessons from Mentor Monday. Friday, we go and use those lessons that we have from League of Traders, and it goes and gives you the whole bigger picture of what we're looking for the outlook on the week ahead. So it can help you plan your week for the next week ahead as well. So even if you can't be there during the day, you can go and every Saturday watch a video or two. I've also added a brand new thing to League of Traders where I've started doing a Tony's tip section, where it's basically just 2 to 3 minutes of a tip that you can pull out through any day. So I'm starting to collect those videos as well. So you can go back and just view that, and it gives you just like one brief tip with an example of how to apply it. So adding that to League of Traders now, we have core concepts in the member section too. And I have a 24/7 chat platform. So you can go and interact with all of our other peeps here that have been with me for a while now. And if you go back and you're looking at like how they posted a year ago and then the trades they're posting now, you can see the evolution of these traders, which is really cool. And one of the things that always makes me laugh is that when folks are posting their trades and they actually got better entries or exits than I did, because maybe they weren't as distracted as I was during the day, and they're the same patterns, same thing, and they're seeing them by themselves. And we'll have like a number of folks posting, hey, I got it too. So it's kind of cool. I know I don't always get the exact same prices you guys do, but it just depends on, like, Donna, for example. You'll see Donna in the League of Traders, and she focuses on megaphones. She had a question on megaphones one day, so I did a class on megaphones, and that whole week we focused on megaphones. So you'll see megaphone after megaphone post day after day. So here is a setup on oil that I had yesterday. And so oftentimes what I'll try to do is I'll post not only the trades, but if I got a chance, I'm also going to grab my executions so that you guys can see where I'm getting into the trades, the prices that I'm getting in, the prices that I'm getting out. This is a momentum reversal pattern. This is just a scalp. I was scalping on Friday. And I want to show you guys that here in just a second. So here's some examples how we can see like the developments of some trades unfolding in the Telegram platform. So these were, you know, live charts, and just grabbing each chart as the trade unfolded. You can see executions, things like that. So to get this offer, just go to tonyhansen.com/150. Here's all the things that you guys are getting. But I want to flip over here now, and I want to show you guys oil from Friday. So I'm going to go back here and go to some of the charts I was discussing in the forum here. And we're going to go up and look at, see, here's the megaphone. So we're going to go up and look at the evolution of oil from the beginning. Let's scroll up here. Where did I start? All right, right here. So what I was doing was I was trading oil, but I was doing kind of as a scalp focus because of what was happening on the larger time frame. So oil was really falling and breaking out of a bigger time frame range on the downside. Momentum was really strong, but things were coming into support levels. So for here example, that 1, 2, 3 that I showed you guys, that's at the end of the trend, and then you're more likely to go into a bigger correction. That's that 1, 2, 3 right here that I was looking at. So that actually triggered a reversal for me. I waited for the little jump, the little correction, and then jumped into the trade. So when this happened here, I then went and I just scalped this because of the bigger momentum on the larger time frame. But you could have used exactly the same system of management here. So in this case, what I did was I bought it, I got out of part of the trade here, and I added back in here, and then got out of all of the trade here. And this is where I was a little bit distracted in my trading. I was doing multiple things at once. I had a measured move target level here to here on the books. If I'd been watching more closely, this stronger momentum would have kept me in the trade longer, because what it's doing is it's then showing me that the increases momentum is more likely to go and give me that third move. So we also didn't have the rounded low here that I showed you on the 2 trades earlier. So it also meant that when I entered this trade, I was really just looking to get a 1 and 2 move. That was like what I was expecting out of it. But then it had the possibility of doing like a head and shoulders and breaking down. The only thing that changed that was the fact that it had a stronger momentum move here. So as this trade evolved here, I recognized, hey, you know what? My order triggered, but then I've got this going into a shallow base here. So I have a price correction, and then it was going into a time correction. Ooh, that means I'm going to get another move up. So I have your first low, your second low, and then it's coming into a third one. I'm looking for an entry at this point. I posted this chart in League of Traders on Telegram so that all of you folks could be watching it as well. And there was my entry right here, and it popped, moved up, and so now I've got the 1, 2, 3 move up. Here was where I was looking at, again, measured move level as a resistance zone, was kind of watching and keeping an eye on that. And again, momentum plays a role here. So with a stronger momentum move, it means you're more likely to go into like a 1, 2, 3 type of move. If the momentum is slower, then this could turn around. You could get something like that where it goes into a channel. It can go slower up like this, and then shift and turn around like that. It did that, but it did it after it had stronger momentum. So let's watch this as this continues to evolve. And here is a bigger target level that I was watching. And here is where this went up. So again, I used, because of the bigger time frame risk that this had with the strong momentum on the downside and no rounded lows here, I used a smaller two-wave move, 1 and 2, to get me out of part of the trade. At that measured move, it was also close to the measured move here. And then it did the 1 and 2 again. So I had the bigger 1 and 2, but I had it looking at a measured move right up here. So 1 and 2, and it didn't make it to that move as fast. So it slowed down. And that slowdown meant that I used a more aggressive exit on this. But if we went and took this and you went and applied exactly what I did here today, not knowing, what's going on the larger time frame, here's the 8,000 tick. So you can see how the momentum is really shifting on the larger time frame. And we were here. So the larger time frame had, so here's what we were looking at. The larger time frame had this stronger downside momentum going on. It had a two-wave move. So it was more risky on the larger time frame to hold on to that trade. So if we had applied the exact same thing that I taught you guys here, though, you've got your first low, your second low, your third, as each move breaks higher, and then you're moving your stop under here to tighten it up. You're moving it to the channel break. This might have taken you out right here. That could have helped protect you if that went and kind of shifted momentum. But what it does is, even if that took you out there and that got you out of the trade, the fact that it did that meant that this was more likely to go into a bigger correction anyway. So it's a great tool to use as you're adjusting your trade and you're using some of these adjusted stop levels. For example, if you're working and doing something else. Now for me, I saw that this came in here really rapidly. So what I used was, because it was coming into that channel, it kind of pushed through it. I used the bounce, watched the momentum on the bounce, and then when it shifted, I got out. So I went into even more advanced trade management manually, but if I kept orders on the books, just being purely technical, basically using like a protective type of mode, that would have got me out right in there with that flush, and it would have protected my gains on this whole move here. So as you can see, there's ways to get more advanced, but knowing that core is going to help get you the maximum out of that gain while protecting you from a bigger correction, even if you don't know the advanced technique stuff. So this gives you a core beginner section that you can work from and then work towards learning that more advanced stuff in League of Traders, where you can get the 3-month membership for $150. And that means you get the entire back month of logs too. So you can go back and you can watch basically 4 months worth of material. If you go and at the end of your 3-month time frame, you want to go and add an annual membership, then you're going to get every single class going back 2 years. So basically, it's just an accumulation of course material and live trade material that you can go back and study. And you can do it 10 minutes at a time, 20 minutes at a time. That's going to be enough to just get some of those core lessons in. So this was the trade. Let me show you guys that. So some of the continuations here, we had further action. Here's the bigger picture. So I want to show you how this played out. So this was a V type of bottom. We didn't have the rounded low going into it. It had the 1, 2, 3 there. And here's the move to the upside. So what this ended up was, here's our 3 moves. Here's the extension. And then you saw the avalanche on the earlier trades that I showed you. That's right here. It triggers the reversal on the short side. So this actually flipped it around. This even gave a bigger move to the downside here. I was talking in the League of Traders forum about this and how this developed and unfolded. So I took this as a scalp. That was one of the trades you guys saw earlier. But as you'll learn going back and reviewing classes from the past or attending League of Traders Live over the next 3 months, this was really only one main move down. So it had a potential for a larger move down. But I was just scalping on this day. So I wasn't worried about the bigger potential. I was looking at, what can I do on some of the smaller moves? I have a nice, 15 tick move here. That's $150 a contract. That's pretty darn good when your stop is only like 4 ticks. So $40 versus $150 as your target level. And the target on a momentum reversal is right here. So I knew going into the trade that that was where my target was going to be. And I got I think the absolute tick high on this. Maybe it was like 1 tick under. Let me show you guys. I posted my executions here. So I got out at 54.59. So I might have missed it by a tick. Here, kind of draw a straight line over. Yep, missed it by a tick, you guys. But that's cool because you know what? That tick might have just been one trade there. If I'd had my order at that level, I might not have even gotten filled. So even in getting into more of the details here, the advanced trade management course goes over the stuff that I talked about here today in even greater detail. But you'll get, if as a League of Traders member, you'll also get discount on courses. So if you go and try to buy one of the courses off of the main site, you're going to get just the retail price, the retail cost of the course. If you join League of Traders, you're going to get discounts on the courses that are generally at least 20%. And that includes any boot camp, anything else too. So the link is really simple, TonyHansen.com/150. That's going to get you your League of Traders membership for 3 months, and it's going to get you the discounts on any of the other courses. So if you want to go through a course, if you're a newer trader and you want to go through things a little bit more slowly, and they're really great to start with as a kickoff point as you're getting into League of Traders too, because League of Traders, we build on things. We have everything working together, and each week we focus on one component, but it's part of a bigger picture. So the courses give you the bigger picture, and you can do them in incrementally, 10 minutes, 15 minutes at a time, and add one new thing in a very constructive manner. So you're building from very beginner to more advanced stuff, and it will help make everything in League of Traders click better as well. So there's core concepts in the League of Traders membership section. That's also going to help you. And anytime you have any questions, you're going to download the Telegram app. You can put it on your desktop, but you have to have a phone number. So you need to register Telegram with a phone number. It's a totally free app. So you can put it on your phone, and then you can add your desktop version. And what that looks like is, and Curtis, is great to have you there. And Andre, yeah, that's going to save you too. So, I mean, if you want the courses, you can kind of basically get League of Traders free because you're going to save the discount on the courses. So the Telegram app looks like this here. And there's 2 channels. So there's the League of Trader forum where you can ask me questions in here. And I'm here at all kinds of weird hours, sometimes 3 in the morning. Just depends on the day. And you're going to see what other traders are posting. So you're going to see, their trades. You're also going to see setups. So they're going to show you pros and cons. So you can see here, Harvey, for example, was looking at this as a momentum reversal and looking at the time development on that as a momentum reversal. So you're going to not only get, my point of view, but you're also going to see how others are applying them. And it gives you people you can chat with. And so after hours, you're going to see some kind of funky stuff going on here. But it creates a community, and trading can be kind of lonely at times. If things are slow and you're waiting for a setup to develop, it can also be good to get a distraction from your focusing second by second on the trades. So it allows you to have a little bit more of a detached view of what's going on in the market so that you're less likely to micromanage It is a lonely sport. Yeah. I mean, it's why from the very beginning of when I started trading, I also started teaching because I was basically sharing my stuff on like the pre-blog ages. I had swingtrader.net and I just started posting my trades there. And that kind of got into how I got into doing more teaching too, because people approached me to teach them from that point. And I loved it, so I kept doing it. And I think has made me a substantially better trader too, because I get to work with and explain things that I might not necessarily focus on otherwise. I get to work on problems and solving problems that I might not have thought of before, but then it makes me a better trader. I mean, even those of you guys that have been trading with me for like 10 years, you'll see my trading from 10 years ago is quite evolved now from where it was 10 years ago. I'm also teaching a ton more of the advanced stuff now, which can be overwhelming to newer traders, but focus on small things, one little thing at a time. That's why I went and I've changed how I did League of Traders since I went back to doing, more of the live stuff during the week, where League of Traders was basically, hey, we would get together on Monday, and then Tuesday and Thursday we would get together for a couple of hours and just trade and, watch stuff. So I went and I made it that Mentor Monday is one core lesson, and then throughout the entire week, we work on that lesson. So it helps develop skills better than just, hey, jumping in and, following the markets for a couple of hours with a million different things that you're focusing on. That was really overwhelming for traders, and it was right at the open. It was also a very difficult time. I was missing too much of my own trading by doing that. So it was all around a really great development. So League of Traders is your community too. As you see things you want added or things that aren't working, we evolve, and it makes it very user friendly that way. Black box can get you a fish or learn to fish and get a fish when you see the best setups. Yep, exactly, Harvey. And know when a setup is more likely to fail. That is a big thing that I teach too, is understanding, hey, when we have the core setups, when and what am I going to change it? What's the cost after 3 months? It's $100 a month. That's a good question, John. So after 3 months, you'll get reminders that your trial's coming to an end, and it will roll over to $100 a month. Still really, really reasonable, one trade, you guys. But you can also have the option of switching over to an annual membership at that point. And like I said, if you're already a League of Traders member, you will get a much more substantial discount on the annual membership, and you'll get a number of months free basically by switching over to the annual membership. And you'll also get all of the recordings back to the beginning of 2018 here. So that's when I started the new League of Traders. I actually ran a trading room for like 15 years, but it was all text based. And I got burnt out doing that, but I'm kind of doing the same thing now because the forum is text based. But the forum, I'm just in there when I see stuff, I'm just kind of hanging out with you guys. I'm not like giving you trade after trade after trade after trade. I'm sharing my trades, yes, but it's fun, I don't feel like as much pressure. So I'm here doing the classes every day at noon, which I love. I get to chat with you guys and talk with you and get to know you guys, and kind of, you become like my trader family over time. But it's not something where you have to feel overwhelmed by it. You can just work, even if you're just coming in and you're participating in the Mentor Monday sessions, and then going and trying to apply those lessons throughout the week. You can pop into the forum here and, communicate with the other traders and say, hey, do you guys see this? Do you see like we've been talking about a pattern we're calling a check mark here this week. And so you'll see a lot of traders who are posting like their examples of what they were seeing as check mark patterns. So the more you interact, the more you're going to learn. Do I pay attention to fundamentals? Not really. I really don't care. I mean, you'll see jokes in the room when the market is moving like super fast. I'll be like, who tweeted? Because sometimes Trump will set off a market move. But most of the times, the market moves, even when they have an extreme move, it's mostly technical. We have exceptions when, for example, trade deals are falling through or things like that. But even with those, it's so intriguing because you will see shifts in the market before they happen. And so when the news hits the wires, it's like, oh, well, we weren't long anyway. So we were looking at things that were starting to reverse. So it's kind of cool. I don't know if it's like an insider thing going on, but it's like the market knows. And you can see that on the charts. Let me run through some more of your guys' questions here. Andre, let me give you email address here. If you have questions on anything, on like specifics of courses or website or stuff, email help@tonyhansen.com. And Andre putting that on my radar. I will also get in touch with her too. Let's see, scrolling down. I like seeing how some of you guys are already implementing some of this stuff because you've seen it in my previous classes. Do I mostly use trade smaller time frames, or do I use small time frames for entry? I sort of was talking about that one earlier, but I am mostly a day trader these days just because of I kind of switch focuses over time, actually. You know what? Right now, I'm trading mostly the indices. It's just easiest for me with League of Traders because it's like a core focus where I can kind of be looking at the markets all day instead of flipping through, different stocks and things like that. But I love all markets, and I just kind of go through phases of what I'm trading. Like for a while, I was just trading Forex. Now I still trade Forex, but not as much because I moved to Arizona. So I'm not up as early to be trading some of those market moves that are taking place in Forex. So it just kind of changes, and that's the great thing about a universal system of trading. It doesn't matter what market you're trading. I have a lot of people in League of Traders that don't even trade futures. They're just there to learn all of the technical side of things, and then we'll talk about stocks. You'll see me talk about them. Scott, for example, is someone that you'll see mostly stock trades on his post. Karen, you'll see a ton of that are just stock trades. So you're going to see a number of people that are just trading stocks, and they're there just to learn the technical side of stuff. And in Forward Focus on Friday, we also look at stocks from more kind of like a swing trading perspective too. Yeah, so like if anyone wants to talk to some of our members about League of Traders, let me know and I will hook you up with some of those guys that volunteered here today. Timing of alerts, is there enough time to actually get in or seconds just to respond to alert? John, when I'm giving trades, they vary in terms of time. So like if I'm looking at something that is setting up on like 100 tick chart, then you might have a couple of minutes, of advance notice. A lot of times you'll see things that are forming on larger time frames though. So when we are talking about things in League of Traders Live, or Forward Focus, a lot of times I'll be pointing out, hey, XYZ is forming this right now. And it might have, really rapid setup. It might be something that's setting up in a day or two. It just kind of depends, because I'm looking at multiple time frames. So the main focus isn't, hey, you're going to piggyback all of my trades. It's going to be, how can you learn to see all of these trades before they happen at the same time that I'm seeing them happening and everybody else is seeing them happening. And that's what you see in the trading forum too, is that you'll see trades that I've taken and other folks have taken, but maybe I didn't have enough time to post it or something like that, and yet they're still catching the trade because we were talking about it all week. That's a good point. I trade Forex primarily, and I've studied fundamentals for a long time. It's tough to follow both fundamentals and technicals because they often conflict, says Andre. That is true. This is why I follow the technical side more than the fundamental side. Fundamentals for me are something that if it gives a confirmation of the technical side, awesome. But it's the technical side that matters the most. So you will often see exhaustion on a chart showing as a technical trend exhaustion before a company will have fundamental changes showing up on their books. So it's a really good advanced notice system to know the technical side of things. All right, you guys, well, thank you for joining me here today, and I hope that you have a wonderful rest of your day. Everything that I've talked about here, if you have any questions at all, email help@tonyhansen.com. The link to join League of Traders is tonyhansen.com/150.